Welcome to our deep dive analysis focusing on Nike for 2025. We'll be examining whether the current situation represents a turnaround opportunity for investors or if there are underlying troubles to be concerned about. This analysis is brought to you by Warren's Money Buffet. Before we begin, please note this is strictly for educational purposes only and is not financial advice. Investing involves risk, and you should always conduct your own thorough research or consult with a qualified financial advisor before making any investment decisions. Nike stands as the world's largest sportswear brand, a true global icon. However, its stock has seen a significant decline, down around 35% over the past year. This raises a critical question for investors. Is this price drop a compelling buying opportunity, or is it a warning sign of deeper issues? Let's start with a quick overview of Nike. Founded in 1964, the company is headquartered in Beaverton, Oregon, and boasts a massive global presence operating in over 190 countries. In 2024, Nike reported revenues of approximately $49 billion and employs around 83,000 people worldwide. Understanding where Nike makes its money is key. Footwear dominates the revenue mix, accounting for roughly 68% of sales. Apparel contributes about 28%, with equipment and other categories making up the remaining 4%. Geographically, North America remains Nike's largest market, representing 42% to 45% of total sales. Looking at the recent stock performance from January to June 2025, we see a notable decline. After starting the year around $75, the price experienced volatility, peaking briefly before a sharp drop in April. It has since traded around the $60 to $62 range, reflecting the market's current sentiment. Examining the revenue trend over the past few years, we see growth leading up to May 2024, reaching over $51 billion. However, the trailing 12 months figure shows a slight dip to around $47.8 billion. Gross profit has generally increased over this period, indicating some stability in the cost of goods sold relative to revenue. Recent financial performance shows some mixed signals. While revenue has grown over the longer term, the most recent TTM figures indicate a slight contraction. We need to look deeper into net income, profit margins, and other metrics to get a clearer picture of profitability and efficiency trends. For income-focused investors, Nike offers a dividend. The forward yield is currently around 2.64%, with an annual payout of $1.60 per share. The payout ratio is around 50%, suggesting room for sustainability. Nike has a strong track record of dividend growth, with 23 consecutive years of increases, earning it an A+ for consistency relative to its sector. Delving into the dividend yield grade, Nike's current yield is rated C- relative to the consumer discretionary sector. While its yield is higher than its own 5-year average, it lags behind the sector median across various yield metrics. This suggests that while it offers a yield, it's not exceptionally high compared to peers. Nike's dividend growth receives a B- grade. The company has a solid history of increasing its dividend, with a 5-year compound annual growth rate of over 10%. This consistent growth is a positive sign for investors seeking rising income streams, although recent growth rates might vary. Dividend safety is a key concern, and here Nike receives a D- grade. This low grade is influenced by various payout ratios and coverage metrics relative to the sector. While the company has a long history of payments, this grade suggests potential pressure points on its ability to sustain or significantly grow the dividend in the future based on current financial health indicators. Nike's dividend consistency is a standout feature, earning an A+ grade. The company has reliably paid and grown its dividend for over 2 decades. Consensus estimates suggest continued dividend payments in the coming years, reinforcing its commitment to returning capital to shareholders, despite safety concerns. The competitive landscape in sportswear is intense. While Nike remains the market leader, competitors like Adidas are actively challenging its position. Newer, fast-growing brands such as On and Hoka are also gaining significant traction, particularly in specialized categories. Nike maintains strong leadership in key areas like running and basketball. Comparing Nike's recent performance to some peers reveals challenges. Over the year-to-date period, Nike's price return has lagged significantly behind several competitors. Conversely, some smaller, faster-growing brands have shown impressive revenue growth, highlighting the dynamic nature of the market. Looking at analyst and quantitative ratings across peers, Nike generally receives a hold rating from both Wall Street and quantitative models. In comparison, some competitors receive higher ratings, particularly in areas like growth and momentum, where Nike's grades are lower. Nike does maintain strong profitability grades. Examining dividends and total returns across this peer group shows a varied picture. Nike offers a dividend with a long history of growth, which some competitors do not. However, in terms of recent total return performance, Nike has underperformed many of these peers over various timeframes, reflecting its recent stock price challenges. Analyzing trading data, Nike's current price is significantly below its 52-week high, reflecting the recent downturn. This contrasts with some peers who are trading closer to their highs. The dividend grades for Nike, particularly the D- for safety, remain a point of focus for potential investors. In terms of valuation, Nike trades at certain multiples relative to its earnings and sales. Comparing these to peers shows where Nike stands in terms of how the market values its current performance and future prospects. Growth metrics across the group highlight the varying stages of maturity and expansion among these companies. Profitability is a key strength for Nike, consistently earning high grades in this area. Metrics like gross profit margin and return on equity demonstrate the company's ability to efficiently turn revenue into profit compared to many competitors. Ownership data provides insight into the shareholder base composition. Reviewing performance, risk, and EPS revisions provides further context. Nike's price performance has been weak over the past year. Risk metrics like beta indicate its volatility relative to the market. Recent EPS revisions, however, show some positive momentum, suggesting analysts are adjusting their future earnings expectations. Examining the income statement and balance sheet data for Nike and its peers reveals differences in financial structure and operational efficiency. Key metrics like debt levels, cash on hand, and profitability margins provide a snapshot of each company's financial health and operational scale. Cash flow generation is crucial for any business, especially for funding operations, investments, and dividends. The cash flow statement data shows Nike's ability to generate cash from its operations and its level of capital expenditures. Athlete endorsements, while not on the cash flow statement, are a significant marketing investment for Nike. One significant risk factor for Nike is its supply chain concentration. A large percentage of its products are manufactured in Vietnam, Indonesia, and China. This exposes the company to potential disruptions and tariff impacts, which have historically threatened profitability. Recent tariff developments offer temporary relief, but the risk remains. Nike has initiated a turnaround plan under new leadership, with a focus on strengthening wholesale partnerships, driving sports innovation, and managing inventory levels. The company has also made progress in reducing debt and controlling the cost of goods sold over the past year, indicating efforts to improve financial efficiency. Analyzing financial health and cash flow ratios over time provides insight into the effectiveness of the turnaround efforts. Metrics like the current ratio and debt to equity show the company's liquidity and leverage. Cash flow ratios indicate its ability to generate free cash flow and its relationship to earnings. Nike's brand power and commitment to innovation remain core strengths. The company continues to launch new products and leverage its iconic status. However, recent price increases on some products could impact consumer demand, and the market is constantly looking for the next big hit. Looking at valuation from another angle, analysts often estimate a fair value for a stock. Nike's current price is trading significantly below some analyst fair value estimates. This gap is a key point of discussion for investors considering whether the stock is currently undervalued. Comparing the stock price to estimated fair value over time provides historical context. The chart shows periods where the stock traded above or below its fair value estimate. The current price is notably below the recent fair value estimate, suggesting potential undervaluation based on this model. This chart further illustrates the relationship between Nike's stock price and its estimated fair value. The significant difference between the current price and the $112 fair value estimate highlights the extent of the recent price decline and the potential upside if the stock were to return to that valuation level. Summarizing the analyst sentiment, both quantitative models and Wall Street analysts generally rate Nike as a hold. While profitability and EPS revisions receive positive grades, areas like valuation, growth, and momentum are rated lower, reflecting the challenges the company is currently facing. Comparing Nike's stock performance to the broader S&P 500 index over the past year shows significant underperformance. While the S&P 500 has posted gains, Nike's stock has seen a substantial decline, indicating that company-specific factors or sector headwinds have weighed heavily on its share price. Looking at moving averages provides a technical perspective on the stock's trend. The current price is below the longer-term moving averages, 100-day and 200-day, which is often interpreted as a bearish signal. The price is currently trading near its 50-day moving average. The Relative Strength Index, or RSI, is a momentum indicator. An RSI around 50 suggests the stock is neither overbought nor oversold. The current RSI for Nike is near this neutral level, indicating a lack of strong upward or downward momentum in the immediate term. The quantitative rating history shows fluctuations over the past year, moving from a higher rating to its current hold. This rating is based on a model that weighs various financial metrics to predict future performance, suggesting a neutral outlook based on the current data. Breaking down the SA Analyst rating shows a mixed view among analysts, with a roughly equal number of buy, hold, and sell ratings over the last 30 days. The average rating is a hold, reflecting this divided sentiment on the stock's near-term prospects. To reiterate the key risks and challenges, tariffs and supply chain issues remain a significant threat. Competition is intensifying across the board, particularly in direct-to-consumer sales and product innovation. Weak sales in China and potential consumer backlash add further uncertainty. Brand controversies also pose a risk. In conclusion, Nike's turnaround plan appears credible, focusing on key operational improvements. The brand's power and innovation capabilities are undeniable strengths. However, the significant risks from tariffs, competition, and market-specific challenges are very real. The question for investors is whether you are bullish or bearish on Nike's ability to navigate these headwinds and execute its plan successfully. Thank you for watching our analysis of Nike. If you found this helpful, please consider subscribing for more investment insights.